Time for the market report. Prices on the downswing.
That's right, Mike, but not too dramatically. We'll get into it, but first, the numbers. Let's take a look at last week's biggest gains and losses. And then in our row report, what's making waves in grain? And finally, in livestocks, what's moving those markets? So, markets closed last week on the downswing. Both row crops and livestock affected. Let's take a look. Last week's biggest gain, corn, up 15.5 cents, and over 3.25% increase from the previous week. Last week's biggest loss, lean hogs, down nearly 3.25 cents, a 3.10 decrease from the previous week. So, row crops down in price. One reason is stocks. We appear to have plenty, at least according to the last WASDE report, and that's affected prices. So, what's a farmer to do business-wise when they're sitting on a good harvest? Market analyst Chris Robinson gives his advice.
You have a lot of opportunity this year if you count the number of days or weeks where we were north of $6 corn. Our actually high was that June-July spike. I think a lot of people thought, here we go, we're going to go back to $7. And so it just depends. If somebody did some marketing, you had opportunities there. If you've done nothing, you do the math. 629 minus 461. It's $1.60 and change. That's that's a revenue bump if you did nothing. So now people are going to store it. The question is, do you have to pay for storage? Is it on-farm storage? There's some carry in the market, but it depends on how much it costs you to store that corn. We were talking about interest rates. A lot of wheat producers are looking at carry again, but it depends on your balance sheet. It depends on what it costs you to store, because farmers will hold it until they absolutely positively have to sell it. And I think moving ahead, people are going to wait and see. Are we going to get a South American market where we get a bump up and they get a chance to hopefully this time sell into the rally instead of waiting? The time for expensive insurance is when we're at $6.30, $6. That's when you had something worth protecting. But at $5 or $4.60, I think you keep a kind of a disaster floor under it and look for rallies to sell. If you don't have to pay for storage, you're in a different group than somebody does. I think if you have to pay for storage, you have to do the math. That makes sense. So you could see a capitulation here. It's the farmers that will have to sell, and I can tell you who's going to be pulling the trigger on a lot of these sales. It's going to be their bankers, because these gentlemen and ladies are going to have to go in and say, hey, I'm looking at an operating loan for next year. And they're going to say, okay, well, where are your assets? What are they worth? Not what were they worth in July? It's what they are worth right now. So I think that's going to be the decision. It's going to be a business decision.
In the livestock markets, things also working on the market side instead of the producer side. Lots of speculation about policies and new technologies. Analysts Ernie Goss and Chris Robinson explain.
Right now, there are concerns about more domestic. For example, in Iowa, pork production is very important. Number one pork producing state in the U.S. And of course, Proposition 12. And the bankers report every month, get reports about, concern about hog production, concern about selling. And Massachusetts, of course, now has implemented some proposition. I don't know what it's called in Massachusetts, but nonetheless, there's more of domestic. That's what the bankers are telling me and us, Creighton University, about what's going on. Yeah, there's significant loss in just as a result of just regular day-to-day production sales. So that I couldn't give you the exact quote, but it was not positive. And the reports, particularly in livestock, has been more about pork production or hogs, and not so much about cattle.
I would say this: if you're looking at these prices, 170 is better than 140. So rather than worry about, are we going to go back to rally at another 15, 20 bucks higher, make sure that you don't let it get any worse, and stop the kind of the monkey business of trying to say, well, this is the low, this is the high. I think the market's going to continue to move. And we talked earlier about the overall economy. The first thing people do, if this is going to be a soft landing or a hard landing, and again, it depends. The first thing people will do, if they're experiencing a hard landing, they're not going to buy steak.
We're talking about seven, the Magnificent Seven, leading the whole stock market. If you look at the Russell 2000, a small company index, It's not up. It's up 1 to 2%. I mean, the stock market's not the economy, nor are these 7 companies the stock market either. I mean, in other words, it's over. Investors are going a little, they're too far in, I think. In other words, this is too much optimism for so little. I mean, I'm not saying the economy is not in a recession. I'm just saying this market is overheated, at least those 7 stocks. And this evening, one of the, this NVIDIA will be announcing, and based upon AI, artificial intelligence. I was there when we had browser, internet was going to do well, it didn't at first. It took time. This is going to take time. We're getting too excited about something that's it's not going to happen for a while. The impacts, the positive impacts of that.
And that's it for a deeper look into the markets. With harvest nearly done, we're into the winter business and next year planning months.